Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Wednesday, September 21st. We're seeing some modest gains to start the day on Wall Street, but overall, investors seem to be playing it safe as they await the end of the Federal Reserve's two-day meeting in Washington. Policymakers have signaled that they're willing to take further action to stimulate the sluggish economy. But with interest rates already near zero, they can't reduce borrowing costs any further. That's why Fed watchers are anticipating a more unconventional approach. The market is pricing in a strategy first tried in the 1960s, called Operation Twist. It attempts to twist the yield curve by swapping shorter-term government bonds for longer-dated ones. In theory, this would lower interest rates on long-term securities, helping mortgage lenders refinance and reducing borrowing costs. The Fed will announce its decision at 2:15 p.m. Eastern Time.
Ahead of the decision, traders are taking a cautious approach, reducing their risk appetite, and that's weighing on commodity prices in early trading. Crude oil is dropping back near $86 a barrel, and gold is also declining to right around the $1,800 an ounce mark. Meanwhile, the dollar is rising against the euro, as European investors worry that progress is slowing on Greece. The country's finance minister wrapped up a second day of talks with the European Commission, International Monetary Fund, and European Central Bank. They're trying to reach a deal to release the next round of bailout funds to Greece. The parties will talk again over the weekend, and the country's prime minister will meet with German Chancellor Angela Merkel next week. Separately, the International Monetary Fund warned that European banks could take a hit of more than $400 billion from the sovereign debt crisis. The IMF also said risks to global financial stability have increased for the first time since the collapse of Lehman Brothers in 2008.
On the corporate front, the technology sector may get a boost from two big names out with earnings after yesterday's closing bell. Oracle is jumping more than 6% after it reported a 36% increase in fiscal first quarter profit. Revenue at the business software firm grew by nearly 12%, and both numbers were slightly above Wall Street estimates. Oracle also issued an outlook for the current quarter that was roughly in line with expectations. Another software maker, Adobe Systems, posted a 15% decline in its quarterly earnings, but the drop was due to more stock compensation costs and fewer tax benefits. On an adjusted basis, Adobe's bottom line number rose despite higher sales and marketing costs. Right now, the stock is gaining nearly 4%. And Microsoft is modestly higher after its board approved a 25% increase in its quarterly dividend.
A couple big M&A deals may focus some attention on the brewing and energy sectors today. Australia's Foster's Group agreed to a buyout from SAB Miller worth more than $10 billion US. The world's second largest brewer behind Ambev has been after Foster's for months now. Foster's rejected the first offer, saying it undervalued the company, and SAB Miller then took the bid directly to shareholders. But talks between the two companies progressed in the past week after SAB Miller increased its offer. Separately, Apache is buying a number of ExxonMobil's UK North Sea assets, including the large Beryl field. The price tag is $1.75 billion, and the deal is expected to add 19,000 barrels of oil equivalent and 58 million cubic feet of natural gas a day to Apache's output. But finally, we do have one big stock decliner in the energy sector to tell you about. Alpha Natural Resources is tumbling 10% after the coal producer said its shipments will be lower than expected this year. That's the latest from Weiss Research. Have a great trading day.